Hi there everyone, welcome to our channel. In this video, we're gonna help you learn how to grow a small account. We promise there are no claims of easy money or holy grails. No, just useful advice, well organized and simply put to help you learn as much about forex trading as possible. So before we continue, on our last video, we taught you guys how to trade and analyze using your smartphone, of which it was an iOS device. So when you analyze using an Android device, we recommend downloading the TradingView app to help you analyze the market even more clearer. The reason is the MT4 platform on an Android is designed to make you lose by simply moving your analysis when you switch from higher time frames to smaller time frames. So when you know this trick, it can be used against you. Using the TradingView app for overall analysis helps. Your analysis stays in the same place, so when you switch from higher time frames to smaller time frames, your analysis stays intact. Now, as we continue with the video, how to grow a small account. We know before the early 2000s, it was not possible to trade the forex market with anything less than 10,000 USD. Unlike today's financial markets, you can trade with a small account like less than $100. More and more traders are entering the forex market, which allows us to leverage our capital and make money from fluctuations in the forex market. So if you don't have any money, try using the broker XM, as it has a $30 free trading bonus and it can help you to start. So growing a small account is a bit tricky because even when you try to use high risk management, if your account is too small, it's already at high risk. This is because you could lose it all with just 1 to 3 losing trades. What can help you is a few tips we're gonna share with you in this video. So the first tip, guys, is basically mastering pending orders. Yes, these underrated trading tools are your gateway to actually growing your small account with your risk decreased by almost 50%. So I'm going to show you guys to actually effectively utilize your pending orders, because pending orders together with price action will help you avoid losing trades and actually help you execute only highly probable trades. You can see that we're looking at USD JPY at an hour chart. So you're going to be using an hour chart for a small account from an hour up until at least 50 minutes or 5 minutes, because you want to scalp. You have to take small profits each day, and those small profits will add up to big results. So to grow a small account, you need to firstly start by scalping. So if you want to swing, you only swing a big account. Your first goal as growing a small account is to master how to scalp effectively. So let's go to the 15 minutes charts to see what the market has in store for us. We can see that the market has been playing inside this bearish trend here. We can see at the bottom we're looking for buying opportunities, and at the top we're looking for a bit of a selling opportunities. So what's happening currently, we can see that we are in a buy trend. I have basically hit my target, and I've analyzed this pair before. I'm going to play the video after this, and I'm going to show you also on my cell phone that I actually did enter the trade. So this is basically showing you guys how I apply pending orders, and I want to give you guys a bit of a tip on how to apply them. So for trading small account, you're going to use pending orders but stop orders, because we have 4 pending orders. We have buy stops, sell stop, buy limit and sell limit. But then for a small account, you need to start with stop orders. In this case, we entered a buy here. As you can see, what was happening, the market was basically around this level. We were looking for buying opportunities. We knew once the market actually crossed this level, we're going to look for buy opportunity. We can see that the market has been respecting this level, so we can't ignore it. So once the market crossed above that level, we're looking for a retest until it hits our target. So that is how we use pending orders, right? The pending order can help me that if the market should reverse, I don't have to enter a buy, I will avoid a losing trade. Hence, we're saying you're going to reduce your risk by at least 50%. You're going to find yourself most probably in a lot of winning trades. There was a possibility of the market actually reversing at this level. Hence, I had the pending order above. So if I entered a buy here currently like where it was, I would have lost if the market went down. If I had my stop order, I didn't lose. I avoided the trade. The entry will only open once it actually touches my stop order, which is now a bit above, and I want to look for actually a retest and shoot towards the upside. So yeah guys, we are currently looking at USD JPY. You can see that the market just tested a very strong support structure here. Previously, the market usually reverses at this level that we at currently. You can see here the market pushed up, came back, pushed up, came back, pushed up, came back, pushed up, and now it also expects the market actually push towards the upside and touch the top of our bearish trend. You can see currently the market is a bit inside this bearish trend. So I can see that the market has 2 possibilities now.
the market can either push towards the upside and retest at this level. I'm gonna look for a bit of a selling opportunity towards the downside before looking for a push towards the upside, forming a bit of a double bottom and touching the top that we have over there, right? Or the market can actually push to the upside, retest and push and actually hit our target. I hope you guys are actually able to grab a tip from this. Your first target is to master stop orders for small accounts, and we have a lot of people that are learning from our channel that are using stop orders a lot, and they've been sending me results. So stop orders are actually effective for small accounts. You're gonna see that you're gonna have more winning trades. There's this guy, let me show you. You see, you win a lot when you use stop orders because you avoid losing trade. However, you find yourself a lot in highly probable trades. So nextly, let's look at Nasdaq. So yeah, this is how Nasdaq played out, how we analyzed it previously. We can see that from the hour chart that Nasdaq was in a bit of a bullish trend. You can see that Nasdaq has been trapped inside this bullish trend, and we're looking for the market to play both sides. So let's see. We know that when you enter, you want to enter from an hour to 15 minutes chart or 5 minutes because you want to scalp, right? You want to take those small wins because your account is still small and they're going to later add up to a bigger amount. So how we analyzed this pair was actually quite easier. We saw that the market was playing inside this descending triangle. So once the market pushed below, I was expecting a retest and a further push to open my trade towards the downside, right? Or the market, as you've seen, shot up and opened my order and actually hit my target. As you can see, it did have a bit of a drawdown. It opened, but I had my stop loss below this level because I knew once the market crosses below this level, I'm gonna look for sales, right? This is more of acting as a very strong last defense of support. This is where we have our bias. So basically, guys, the first tip of today was learning how to effectively use stop orders. So also for Nasdaq, we did analyze. I'm gonna show you as well how we approached analyzing this. So currently, guys, we're looking at Nasdaq, and we can see that Nasdaq has been trapped inside this nice bullish momentum. You can see below looking for buying opportunities, and at the top we're looking for selling opportunities. So the market has touched the bottom, yet it hasn't actually came back to touch the top there. So the market is trapped in this bearish triangle. There's a nice descending triangle I want to show you on 50 minutes charts. That's where I'm going to have my entry. So what the market is doing currently, the market is trapped inside this triangle. So we can see that the market actually pushed towards the upside and it's now trapped in this region. So we can either expect the market actually push to the downside and have a retest and push towards the downside and actually test this level here. Scenario 2, I'm looking for the market to push up, have a young retest and push towards the upside and actually hit our target, right? So when you trade things like Nasdaq, you have to know that Nasdaq is very strong with retracement. So I'm gonna have my stop loss a bit further than below this line because I'm looking for the market to actually retest, if not to shoot up and actually hit a final target. But then I'm gonna put my stop order a bit high so that the market actually opens at a safer level to have a bit of a retest at the top and shoot until it hits our final target. And we can wait and see how the market actually plays out. So what we used to execute our entries was stop orders. We're seeing this as being more effective. If your account is big enough, you can enter a trade like a buy here. You can go down with you and shoot back up. But if your account is too small, this drawdown will blow you out. So we're trying to avoid you guys actually being blown out by those drawdowns by effectively applying stop orders. And to even put a safer place, I would have recommended this for a small account. This place here is a stop order because we saw that the market has crossed this level and now we are safe to go for a buy opportunity. We have covered a free lesson on floor and ceiling, guys. Those who haven't seen it can go check it out. Nasdaq also respects floor and ceiling. We can use a lot of strategies on top, but then the base can also start with the strategy that we gave you guys. Many of you are winning with the strategy. We're glad to see you've been sending a lot of your results. So the first tip of the day was actually learning how to effectively use pending orders.
Moving on with the lesson, how to quickly grow your small trading account. Use a leverage of 1:500 on your trading account, which will help you to achieve high profit with low risk, provided that you use small lot size as a way of proper risk management. We all have a goal when it comes to our trading account. Maybe you have a big number in your head that you're working towards. Perhaps you simply want to build from something small. Whatever it is, growing your account in an efficient and fast way is something we would all love. Although there isn't a single magical method to boost your trading account to the stars, there are several areas worth paying attention to. All of them make account growth much quicker and much more efficient. These are some of the best lessons I have learned throughout the growth of my own accounts and have helped me to achieve my financial goals in only a few years. So let's take a look at where you can take action to grow your small forex trading account quicker. Firstly, we're going to start with risk to reward ratio. I'm not going to beat around the bush with this topic. Your risk to reward is perhaps the single most important part of growing your account in a fast and efficient way. Your risk to reward is the ratio between your target and your stop loss. I recommend a minimum risk to reward of 1.5 because your take profit target must be bigger than your stop loss target in order for you to maximize your profits. If a potential setup gives you 1.1 risk to reward, then it does not qualify for a trade entry. Simple as that. Why is that so? Well, if you use 1.1 as a minimum risk to reward, that means overall you must be above a 50% win rate in order for you to be a profitable trader. Now, with a 1.5 risk to reward minimum, you need to have a win rate of over 40% in order for you to be profitable. That extra 10% is a big deal. For every 3 losses, you need to only win 2 trades in order to cover those lost trades. This helps in one area that many traders fall into: chasing losses. There is less pressure on your mindset to win at all costs, and this will allow you to trade at the higher level. Efficient trading is about being a profitable trader and not a winning trader. Trading is about protecting your capital, and with a minimum risk to reward that you stick to, you will find your account growing much faster than if you did not. Our second topic, account funding. When it comes to forex trading, the amount of capital you trade with has a significant impact on your profits and growth. The more capital you have, the bigger the return you see per trade. This is because your return is a percentage of your account size. So this means that larger amounts of capital generates more capital. It's how the rich can seemingly get richer so easily whilst the poor struggle to break through the ceiling. Let's say your account size is $1,000. With a return of 5% per trade, you are making $50 per win. And now let's say for instance your account is $100,000. Your 5% return jumps up to $5,000 USD. If you're a new trader, start small when trading a live account. The psychological impact would be too big if you immediately started trading with all of your savings. Instead, if you have a little bit of money saved, we recommend adding capital to your account every month. It can be a small amount, but with time, this will allow you to see bigger returns and grow at a faster pace. Now, our following topic, overtrading. I know that I just told you to look for more trading opportunities. However, there are pitfalls that traders fall into when I tell them to look for more trading opportunities, because there's an issue that we call overtrading. You shouldn't be taking every single opportunity that you come across. If you overtrade, you will stunt the growth of your account. We want the growth of your account to be fast, yes, but it also needs to be efficient. Overtrading reduces your efficiency by a significant amount if left unchecked. A lot of traders suffer from FOMO, which stands for fear of missing out. Accept that you will miss trades. Accept that not every trade is going to be a win. But more importantly, work on your price action analysis skill set so that you can be able to pick the best trades from a lot of wrong trades. And our last topic is to be consistent. Be consistent with your trading. Many traders fall out of trading because they give up mentally and start to check their charts less and less. Consistency is the key to growing your account. Account growth doesn't happen from big wins and huge jumps forward. It happens from everyday small decisions. This accumulates to create consistent level of progress and less of a chance for a large setback to occur. Growth comes with consistent time spent on your charts. This is the glue that allows you to succeed with account growth because you stay informed and remain